Spring break is in full effect right now. It is currently April 4th. I'm here with my buddy Alex Curry, who's the Director of Business Development for 360 Blue. And as always, once a quarter, we kind of like to get together and break down exactly what's going on in the rental market and how that impacts real estate overall. So Alex, we're in probably week 3 of spring break?
Week 3.
How are things looking overall along 30A?
Great question. First of all, thank you for having me.
Of course.
It's an interesting spring break,
Yeah.
to say the least. March is looking a little bit softer compared to same time last year.
Yeah.
However, April looking a little bit stronger. So as far as our portfolio is concerned, we're about flat compared to same time last year. Little bit behind, but we're close. I think we're going to even out compared to same time last year.
Awesome.
And for Q1 overall, we're also flat as well.
Gotcha. Yeah, I think one of the coolest parts about 360 Blue is obviously a wide portfolio and an array of different products too. So we can really talk about everything from under $1 million to the luxury product. I think with spring break this year, and kind of the stuff I'm hearing from the client side is, there's now an earlier curfew in some of these heightened beach communities. Just through some events that happened last year. Our security, I think, is doing a great job to make sure everybody feels protected.
Yep.
And then second, the private versus public beach has always been around. I think just recently has been more enforced, and everybody on Facebook groups don't quite understand what is what. Have you noticed that having a direct impact on this spring break and going on to this year?
Yeah. So as far as curfews are concerned, no, we haven't seen a detrimental impact from the curfew. I know last year it was just Seaside, and then this year it expanded to Watercolor and Alice Beach. So all 3 communities had a curfew this year, 7 p.m., and all 3 communities are actually pacing ahead in occupancy by 10% compared to same time last year for spring break. So as far as I can tell, I don't think the curfew is having any kind of negative effect.
Gotcha.
As far as beach access is concerned, always been a thing. I think it's become more of a thing in recent years with the House bill that was passed in 2018, voiding customary use. I've been reading lately there's another bill that they're considering that could bring customary use back potentially. We'll see how that shakes out. But for the time being, I do think it is having a detrimental impact to some effect. It's hard to pinpoint or quantify it exactly. I can tell you we saw 2 million visitors last summer in Walton County, and that's down from 2.27 million visitors in 2023. Looking at it year over year, that is the biggest decline I've seen in terms of number of visitors. The last time we had 2 million visitors was actually 2018. But a big difference between 2018 and today is the supply of lodging options. Back in 2018, beginning of year, we had just under 1 million nights available to book in this area. Today, that figure sits at around 2.3 million. So that speaks to the supply, right? So, that is a factor. Now, I do believe the market is still resilient. This is a special area. We still have a bullish view on this market. Overall, when you look at it, our RevPAR by quarter for this year, we're pacing ahead, with the exception of Q1 where we're flat. The following quarters we're pacing ahead by a decent margin compared to same time last year. So that's encouraging to see. We're still well above 2018 levels in terms of average daily rate and RevPAR. I know I've thrown out RevPAR a few times, just for anyone that doesn't know that's a key performance indicator that balances occupancy with average daily rates. So in our view, that's the gold standard as far as KPIs are concerned.
Yeah, I think spring break this year at least feels like, especially in March, it just felt slower.
Yeah.
I think real estate wise, I think last time we were doing some of the calculations, we're about over a year of inventory. I feel like every other home has a property management sign in front or for sale sign.
Yeah.
And I think one thing that I like that you mentioned is the resiliency of our area too. If you look at what St. Joe's doing in our area with their 50-year plan, lots of money is being invested in Walton County and Bay County. I think from a real estate standpoint, besides investments, Walton County ranked first in education in the state of Florida, which is huge.
Wow.
So I think, we were talking about Watercolor, and I think a lot of people are transitioning into more of a second home ideal. Like my ideal buyer right now someone that is not too heavy on the investment side
Sure.
in terms of like what's the ROI. And a lot of people obviously want that to cover their cost of ownership. But like what we talked about, I mean, when it comes down to affordability along 30A, people are paying heightened prices and expecting to get 100, 180, but they're only really making 60 to 80,000. So it kind of changes the affordability side.
It does. And I think you have to be very careful as an investor in this area when you're evaluating property management companies. As far as when usually you get a rental projection from them. Ask some questions about the rental projection, right? What kind of comparable properties did you use to arrive at the rental projection? Of those comps, is there one that most resembles the home that you're looking at? And how did that comp perform relative to the market? Your more esteemed companies in the area should be able to give you that information.
Yeah, and I think that's kind of funny because this house we built as a spec is now on the vacation management company's website, and we got a wide array from 80,000 in projections all the way to 170,000. So as a buyer coming in, is that ultimately realistic? You can't really gauge off just projections alone. So I think always starting that conversation with whether it's me as your agent, whether it's somebody else, find people that they truly trust, that has like a wide portfolio and that can actually speak with data and numbers more than just hypotheticals. Because I think in our market right now, if we were basing everything on hypotheticals, that's 50%, probably roughly half the market is people that bought in 21, 22
Absolutely.
on hypotheticals, and now they're back on the market trying to break even or losing money. But one thing I think that was super interesting is we usually talk about what makes a property stand out: private pool, views, amenities. But we're kind of talking about right before this, talking about Seacrest versus Dune Allen.
Yep.
What are we seeing in Dune Allen that makes it stand out?
So Dune Allen's very interesting to me because I looked at all communities.
Yeah.
How are they doing in RevPAR compared to same time last year? Most communities were either flat or a little bit behind.
Yeah.
Dune Allen is ahead by almost 14% in RevPAR, which blew my mind. But another piece of the puzzle is supply of lodging options in Dune Allen. And looking at nights available to book right now compared to same time last year, there's about an 11% increase.
Gotcha.
So that's a pretty healthy increase in supply.
Yeah.
So before I just made the assumption of Dune Allen, that's where you need to invest in because it's 13% ahead compared to same time last year. Looking at the supply is the other piece of the puzzle.
Yep.
That could be a short-term thing. It's possible we could have this conversation a year from now and Dune Allen could be flat same day next year, right? Due to the increase to supply. And I think that serves as the explanation on why it's doing so well. You have newer, bigger, and better homes coming online in that community as we speak. And I think that's attributing to higher average daily rates, which is driving up your RevPAR.
Awesome.
So,
and I think it's super interesting, again, with the numbers side. And I think what 360 Blue does very well is kind of breaks up the inventory and the products into different classifications, right?
Yes.
So we're talking, luxury all the way down to, the 360 Blue as the brand name.
Yes.
Let's talk luxury for a little bit, because there's people that have watched this that, they want to trend on the $4 to $5 million side, but rental projections and cost of ownership still matter a ton to them as well.
Of course.
So on the luxury side, we talked about watercolor. Watercolor, some of those that are looking $4 to $5 million goal front, is there anything that's standing out to you in terms of what you're seeing on the number side to what could sway somebody to now's the right time or now's the time to wait?
So watercolor is interesting to me because even though it's flat right now in RevPAR compared to same time last year, I'm seeing 9% less nights available to book.
Gotcha.
Which is substantial.
Yeah.
And that to me is a strong indicator of a decreasing supply of vacation rentals in the space. So could that mean more homeowners are buying in watercolor, homes that were previously rentals and moving in them full time, or just taking them off a rental program and using them as a second home? That's my theory on it.
Too.
So watercolor to me, even though it's flat right now, I think is a good community to invest in because right now it's showing a decreasing supply, which is promising, and it has has a ton of amenities to offer guests.
Yeah.
You know, it's always been a strong performer, and I think it'll continue to be.
Awesome. And in terms of Gulf front homes, because obviously being Gulf front comes at a price.
Yeah.
But when you're looking at 360 Blue's website, you see that amazing photography and the videography, and you're just looking at that view, everybody wants it.
Yeah.
Are you seeing that still kind of trend flat, like the rest of the luxury, like something like watercolor?
No, Gulf fronts, I mean, still historically perform very well.
Yeah.
I mean, if you're comparing it to, okay, I have this Gulf front home today, how is it doing compared to 2022? Most likely it's down, right? Because that was peak of market. And we saw a lot more visitors to this area. Back in 22, it was about 2.6 million visitors. So pretty stark difference compared to today. But Gulf fronts still are very strong performers. And that's usually, as you mentioned earlier, we have a very diverse portfolio with an array of different options. So we're not a one-size-fits-all company.
Yeah.
We have our Alea collection, which is kind of like our first class tier of properties, which would be typical of a high-end Gulf front.
Yeah.
We have our standard 360 Blue brand, which is still a luxury brand. It just has a wider range of revenue potential, anywhere from about 120,000 to just shy of 400,000.
Gotcha.
And then, of course, we have our Callista brand, which is more intended for single-family homes and condos. Similar to this home, this would be a wonderful candidate for our Callista collection. And that usually is for homes with revenue potential between 50,000 to just shy of 120,000. And the reason we have it segmented that way, of course, it allows us to offer a more customized service model to our clients, but also for marketing to guests, right? I mean, there's a certain guest and demographic that's going to book this home versus a Gulf front home that's, you know, listed for 17 million.
Right.
So that's kind of it in a nutshell, as far as how we're marketing to different demographics and offering different services and dedicated resources.
Yeah, I love that. I think that report that you guys do, the quarterly reports,
Thank you.
is huge. You know, I think those, you know, I think the biggest thing that we talked about is, and the reason we have this YouTube channel is that sometimes it's just hard to get information on what's going on surrounding your investments. You know, and that actually kind of leads me to my next thing is infrastructure here in our area is definitely getting better.
Yes.
You know, we're getting, again, we talked about that 50-year plan for St. Joe.
Yep.
Walton County, Bay County are still heavily invested in across, you know, not just real estate, but in terms of new commercial spots come in, especially Pier Park is a perfect example. You know,
yes.
Top Golf and then Pirates Voyage, but also the 2 new terminals in the airport. You know, I think having those direct flights may change our feeder markets. You know, I started noticing a lot more of my clients are from Chicago and New York. Are you seeing some of our feeder markets kind of change from the drive-in destinations to a little bit further out?
We are, to a certain extent. We're still, and I think that'll only improve, and I'm glad you brought that up. This is still an overwhelmingly driving destination. You know, probably I would say, you know, looking at survey results from last year, right around 76% of all visitors to this area drove here.
Yeah.
And a similar percentage came from the Southeast.
Gotcha.
But during COVID, we were exposed to new markets as well. And I think those markets are now kind of becoming, like Chicago is a great example, a bigger market for us. And I think that's only going to continue. This is a special area, and it's always going to be special. And with the additional terminals and the infrastructure, I think that's only going to help.
Yeah, and I hope some of the new influences that we can kind of see, hopefully we'll get some new restaurants and get some cool spots around.
That would be cool.
And
yeah.
Is there anything that you wish was coming to 38 or Santa Rosa Beach as a local that you think would be a cool add to your daily life?
You know, I would love to see, I mean, I think more flight options is a big one. Restaurants, of course, you know, I think we're continuing to see more diverse restaurants enter this area. You know, a couple years ago, I mean, you go back 10 years, it kind of felt like it was either seafood or barbecue. But, you know, coming from a city originally, you know, I think I was accustomed to a bigger melting pot of restaurants and cultures, and would love to see that more. more often here, and I think we're trending in that direction.
Yeah.
So.
Oh, I agree. Yeah, I think for me, my wife wants a Trader Joe's more than anything else.
Oh, right? Yeah, that's a good one.
I think I've talked to a couple of my friends in Tallahassee that own gyms.
Okay.
Like a big commercial gym or like more options.
Yes.
Because nothing's like hitting the gym at noon and it's just packed.
Yeah.
But yeah, I think there's nothing more, in my opinion, that I'm excited about and bullish about than the 30A market. And not just the 30A market, but Panama City Beach and Destin.
Yes.
We kind of talked about that last video, but Panama City Beach and Destin, how are they looking?
They're still about flat compared to same time last year. So I wish I could offer more as far as what communities look really promising, but to be completely transparent, most communities are flat or a little behind, with the exception of Dune Allen. But Dune Allen also saw a pretty significant increase in supply of lodging options. So I think it's just important to be cognizant of that.
For sure.
But you got to just look at the previous year. I think that's your best benchmark. And I think 2024 is a good benchmark year to go off of. I mean, we are seeing stability now. We are seeing more equilibrium between supply and demand, whereas in previous years it just kept ticking up and up and up. So my hope is that number of visitors don't continue, since 2021, it's kind of gradually trended down, which isn't surprising when you look at it historically, because there was such an increase. But, hopefully we're stabilized at 2 million visitors to this area, and hopefully we gradually tick up the number of visitors. That's my hope, and I think that can happen. Awesome. This is a special place. So
completely agree. Let's say someone's watching this video, they call me up, we're ready to buy that Gulffront, which I hope somebody does, and I introduce them to you. What does the process look like to get connected with 360 Blue? What is that overall in the long run, the services that you guys
Of course, reach out to management at 360blue.com. Myself or one of my sales associates are happy to talk with that buyer about the revenue potential of that property they're looking at. We'll get them a rental projection. We can provide them with market reports, a marketing plan as well, as far as what we're going to do to pre-market the home and maximize their rental revenue. Get them off the ground as quickly as possible.
Love that. And I think one of the reasons that I just love having conversations like this is it's information packed. Like, we're not just talking out of theory, we're talking about real life. I think that's why a lot of people love watching videos like this. So I always appreciate you taking the time.
Of course.
Connect with 360 Blue. Feel free to connect with me. Let's sell a couple Gulffronts, and we can't wait to see you at the beach soon.